Come on, 2, 3.
Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, March 12th, 2022. It's been another great week of shows with great contributors. We kicked off the week discussing market volatility and whether it's a buying opportunity for long-term investors. Let's take a look.
This market is unique now in that, we're coming out of what felt like a couple of lost years with the pandemic and COVID being the focus of sort of everything, investing included. And now it feels like we're perhaps sitting on the edge of another lost year because of geopolitics. But, you can always sort of dissect that a little bit more and try to figure out sort of what to do and where the opportunities lie. So, my general thought on this is I was doing some research on this too. So Russia makes up about 3.11% of the global market, global economy. Ukraine is less than 0.5%. So, this is obviously a huge humanitarian issue. And I just want to mention that we'll sort of put that aside because we're talking about markets and investing today. But that's, an astounding issue, right? But in terms of the market itself, I don't think that it's going to have necessarily a huge impact on the markets. I think that this is basically another topic that is adding uncertainty because of things like the Fed potentially tapering very quickly, too much too soon, or the unknown about how much and sort of when, the thought that inflation remains high, and the market just sort of didn't need another uncertainty bullet point there. So what I think, though, is that if we take all of this aside and once we're sort of, past this particular issue, I suspect that the economic data is going to shine. And, perhaps we have slightly slower growth because of things like inflation and the price of oil. But I think that overall, it comes back to the fact that companies have strong balance sheets, fundamentals look good, the consumer is spending, retail numbers look good. And I think that towards the end of the year, that sets us up for, a double-digit return from where we are now. So these are kind of the FOMO days. It was really hard to buy in the heat of the pandemic. I mean, things just looked terrible. We had no idea when the world would reopen, but you have to think that, this is going to end, right? All of these things have some sort of conclusion. And at that point, the market sort of resets and moves forward, and the volatility on the way up, and sort of the momentum on the way up is usually higher than it is on the way down during these events. So sideways volatility for now. In the short term, definitely have some headwinds here. But I think if you have cash on the side, it's a good time to dollar cost average in, take some opportunities and sort of, don't look at the portfolio every day and freak out as it gyrates a couple of percentage points. It's likely to be okay. If you're fully invested, then I would say, don't recognize losses if you don't have to. And I'm bullish on the rest of the year. I really am. I heard the CEO of Snowflake on an interview that he did said today that 25 bips is really the first water stop on a 26 mile marathon, which means nothing. And I thought that was a great way to put it. You've got 25 miles to go, and that 25 bips is unlikely to do a whole lot. And that aside, the market, I thought yesterday responded well to that too. When I watch some of these interviews with the Fed and just sort of hear people talking about it, people seem to have very, opposite opinions on whether or not he's doing a good job and whether he's late to the game and put us in this terrible situation, or whether he's sort of, the savior of markets. I think that I think that the Fed chair did a great job, right? I mean, we had a novel pandemic that shut down the world economy, and particularly the U.S. economy, and he really kept us out of that and kept, sort of market strong. He kept money in the pockets of consumers. They were able to sort of live and move forward, and jobs came back because of a lot of what he did. And in terms of raising rates too soon, if I were in his position and just as an investor, I wouldn't have done it either. I mean, how do you sort of get to a point where you're just recovering from a pandemic and January hits, Omicron comes and we're totally shut down again, right? And nobody really saw that coming out. We kind of thought it was over, right? I think prior to the winter. So I think he took in the data as he said he would. He was transparent. He was very much communicating with the market. And I think he's doing the right thing now too, right? We have this massive unknown and uncertainty. We see the market pulling back. If you get this issue where the consumer is affected by oil prices, they're affected by heating their house and driving their cars and things like that, and because of that, they stop spending in the near term. I actually think that that's a bigger problem than if inflation stays higher for 2 or 3 months before it starts to kind of pull back after the Fed hike. And given that, we do have sort of proof now that supply issues are easing. So we're still just not going to get that clear inflation number. And I think as an investor, I'm pretty confident that, he seems to be making reasonable decisions and isn't looking to throw us into a recession and isn't looking to, sort of protect the market. But he's definitely not looking to crush equity trading either. So I don't think it's a big factor in my investment picks, to be honest.
We also discussed how new Department of Labor fiduciary rules are straining insurers. Let's take a look.
So last month, the U.S. Department of Labor began to enforce a new exemption for fiduciary advice. This is really important to insurers, life insurers, who are providing annuity products, especially to 401k, defined contribution investors who are interested in rolling their retirements over into a lifetime income investment option. The exemption that the Department of Labor came out with here, actually this originated under the Trump administration, but last year under the Biden administration, they interpreted the Trump administration's rule to mean that first time or one-time investment advice can sometimes meet the very high standard of fiduciary advice if it's intended to be part of an ongoing series of advice. Sometimes that's according to the type of annuity product that you're purchasing. Now, that's a big deal to life insurance providers because, often they're relying on independent contractors or independent agents who don't want to be held to that really tough, that really high fiduciary standard for a number of reasons. It's very expensive. It also means that both the agent, the insurance agent, and the company that the insurance agent is providing through are held to some really, really strict disclosure requirements that the U.S. Department of Labor now is enforcing. And so what's interesting about it, though, is that a lot of the lawyers that I've spoken to are saying that, look, although there's a lot of fear around these really tough fiduciary standards under the Department of Labor's new interpretations, some types of annuities may not qualify. But because there's so much fear, because there's so much, uncertainty surrounding these new interpretations, most life insurers seem to be operating under a new standard whereby just about all of the rollover advice that they provide is considered fiduciary advice. What the regulation actually does is it provides an exemption to these insurance agents and insurance companies to allow them to collect a commission on the advice that they provide. Just to kind of cover our bases here, fiduciary advice, base level, says that you cannot collect any type of additional income. You can charge a base fee for the advice that you provide, but you can't collect any kind of additional income based on the type of advice that you're providing. In other words, you can't collect a commission because you sold a certain insurance product. This exemption says that although you are a fiduciary, you can still collect a commission, but it tacks on all of these additional requirements in order to comply. Now, I think a lot of insurers are saying, look, we can stomach this, but they don't want to have to stomach it. And like I said, what's really interesting is that because there's so much uncertainty about this, and because the Department of Labor really hasn't said anything about it since they offered up their latest interpretation, insurers are just weighing on the safe side, and they're starting to decide that, look, just about anything and everything that they provide is going to be fiduciary advice. Now, why that matters to you, why that matters to the customer, the client, is that fiduciary advice is considered by some standards more expensive. Under some experts believe that this could lead to a type of, closing off of the marketplace where, smaller, clientele who don't have as large of an investment lineup to offer, that they won't have access to the same advice as individuals who have more assets in the bank. Ask the individual that you're talking to. Ask them, are you held to a fiduciary standard? Are you acting as a fiduciary when you provide this advice? If they are, know that they may be relying on this kind of exemption. And like you said, that's not necessarily a bad thing, but fiduciary advice is considered the highest level of advice. It doesn't mean that other types of advice aren't good, but that is the highest standard that the U.S. Department of Labor is regulating. And so, it doesn't hurt to ask. I would certainly recommend. Yeah.
We're halfway through a look at some of our best segments of the week. When we return, the other half, you're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We also discuss the pros and cons of taking dietary supplements. Let's take a look.
They fill in the gap for the foods that we're not consuming. I definitely feel like we shouldn't be relying it fully. We should make sure that we're having a well-balanced diet. We're eating our fruits and vegetables, getting in the necessary protein, with getting our B vitamins in. But sometimes that doesn't happen, right? People are not eating as well nowadays. We have like the standard American diet categorizes how Americans are eating, and 75% of them are lacking in fiber, lacking in a lot of fruits and vegetables that they should be consuming to get all that nutrients. So there is a lack and need in the American diet. So I definitely don't want people to ever think that they can eat fast food all the time, but then take this multivitamin and feel like they're doing really good for their body. There's definitely a lot of side effects to that. So we wanted to make sure that they're having a well-balanced diet, they're able to eat, but then having, like we said, just filling in those gaps of maybe not eating the most nutritious. We talked about last time how like our food today is not as nutritious, even our fruits and vegetables, because our soil doesn't have the nutrients that it did like years ago. We talked about the travel time, like when we pick the produce, there's that travel time that they have that makes it lose that nutrients too. So when we look at supplements, we look at it just like as an addition, to those things, because we are missing it. And there's periods of time where people need it. So if the woman who's pregnant, she's going to need her prenatal vitamins to make sure that she's getting her folate and getting her B vitamins in order to prevent any side effects for the fetus. So there's those needs. There's people with dietary restrictions. So if they can't have, if they're vegan, not getting the meats that have a lot of the B vitamins, so they're needing the supplements for that in some way. So there's people that definitely have those needs for it. So then they should be consuming those multivitamins or other ones. Not all supplements are equal. I will definitely say that. So definitely doing your research, making sure you're getting the best valuable kinds of vitamins. And you kind of mentioned toxicity level. So that typically happens with fat soluble vitamins. So like vitamin D, E, K, and A. So those are usually stored in our fat stores. So because they are being stored in our body, if we take too much of it, we can risk having toxic levels. Our B vitamins and C are usually water soluble, so we pee it out. We'll have expensive urine then because if we have too much of it, we're just gonna expel it in some way. So definitely being cautious of how much you're taking, not thinking that, if I take like 3 tablets of this vitamin D, that's 2,000 milligrams, is going to benefit me right now because it's good for me, but in reality, it's like, no, we should take the serving size. If it's saying take 1 tablet a day, let's try to do that. And mostly during this time of COVID, right? Everybody is just trying to make sure they have a good immunity. So vitamin D is definitely something that I always recommend people to take daily. Vitamin C and zinc definitely are good like immune boosters, just to make sure that they have their immune strength.
And finally, Wisconsin is rolling out a retirement savings program for kids. Let's take a look.
So our for 401 kids, it's managed by the state. We have one of the best state-run pension funds in the country. It's well over $130 billion. And so this would be very similar, where the state automatically opens an account. Again, parents can opt out if they do not want their child to have an account, but then we will invest it the same way that the state invests for public employees, making sure that it is, a mix of whether it is real estate investments, it's equities, that whole mix that ensures that 5 to 9% interest. The difference between 401 kids is a few things. One is that we are automatically opening these accounts and seeding it. The investment, as far as what they will be invested in, is probably very similar, but the usage is very different. One of the challenges with 529s is that if you don't use all of the money in that account, you can't roll it over. And so what we are excited about is it's not just education you can use 401 kids for, it's for first-time home buying. It's for medical emergencies or for retirement security. So it's very universal in kind of its application, which I think is another key differentiator with this program. Our state legislature is right now working on requiring financial literacy in our high schools. But something we keep hearing over and over again is that compound interest and investments just seems so imaginary. But with this tool, kids can actually see their own money and how it's growing. And we believe that that's going to encourage kids to save and to continue to save more over the course of their lifetime. And so I think one of the big things is how are we making sure that we're teaching kids to fish? And so in my mind, this is exactly a combination of 401 kids and their high school financial literacy working together to make sure they're best positioned to start saving throughout their lifetime. A lot of the work was on the back end, was putting this program together. And we then first received bipartisan legislation, which is a great achievement within itself here in the state of Wisconsin. And our head of the Ways and Means Committee just did a hearing a few weeks ago. And once that committee comes out of hearing, then it will hit the floor for the legislature to pass and be signed by the governor. So we hope that whether it is the start of 2023 is what we are looking at in making this program a reality for children and families across the state.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more in all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, check out our website, that's www.broadcastretirementnetwork.com, and our streaming partners like Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow for BRN Sunday. I'll be joined by members of the media, academia, and financial services as we analyze all the news for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.